When you start trading, it seems that the main thing is to react quickly, but over time, you realize that it's not just important to be fast, but also on time. Today, I'm going to have a trading session with an emphasis on timing. We'll see where the moment has already passed, where it's early, and where it's the most important thing. This video will help you feel better the dynamics of the market and find optimal entry points without fuss. Before we start analyzing this strategy, you need to set up your account correctly. I'll use the candle chart type, and the time frame will be 1 minute. Let's move on to the indicators. I'll need Bollinger Bands, MACD, and OSMA. I'll set the period of the Bollinger Bands indicator to 20, and the deviation will be 2. I'll leave the standard settings for the other indicators. They're completely suitable for this method. I start every morning with a market analysis, and I share it on Telegram. There's no fluff, only specifics, important levels, and thoughts on the current situation. To connect, just follow the link in the description, subscribe, and message me personally. I'll help you navigate. I found a situation in which I can open my first trade. The trade time will be 2 minutes. I'll start with the trade amount of $14. I think the price will decrease. Are you ready? Let's look at the situation. You see the Bollinger Bands indicator builds a zone in which the price chart moves. Situations when the price chart goes beyond the indicator zone leads to a trend reversal. I noticed that the red candle has moved out of the indicator zone, which means a downtrend is expected. I waited a little while to get the signals from the other indicators. The chart of the MACD indicator was built above the 0 level, but the price began to decline, and the indicator chart also began to build below the 0 level, and indicator lines crossed each other. This is a signal that the price will decrease. The OSMA indicator gave the second signal. The indicator's chart also began to build below the 0 level. Thus, both additional indicators indicate that the price will decrease. If you look at the whole signal in general, it turns out that the market has started a downtrend. That's why I opened the trade to reduce the price. Great! My prediction turned out to be correct. The trade is profitable, my capital has increased, and now it stands at $27. I'm thinking of opening a few more trades and talk about the details of this strategy a little more. After spending some time searching, I found a situation that could be profitable. I'll raise the trade amount to $27. My forecast is that the price will rise. Well, as you can see, the market price was declining and several candles were closed outside the area of the Bollinger Bands indicator. The price chart returned back to the indicator zone and the price began to rise. The MACD and OSMA indicators confirmed the uptrend. The indicator charts are built above the 0 level. Working with this strategy, it is important to adhere to several basic rules. First, all 3 indicators should give the same signal. If at least one of these indicators has not given a signal, then it's too early to open a trade. If you see that the price chart has crossed one of the boundaries of the Bollinger Bands, then just wait for the price to return back to the indicator zone. Only then you can check the signal using the other indicators. If the MACD and OSMA charts are built above the 0 level, then it's a signal for a price increase. If it's lower, then it's on the decline. Stick to these rules and most trades will be profitable. Bingo! There's really an upward trade in the market. My capital has increased to the amount of $52. Excellent results in a couple of trades. I'll keep working because I'm sure there are a couple of trades ahead. This time the trade amount will be $52. I think the price will go up. I've already dealt with a similar situation in the previous trade. It is completely similar to it. All 3 indicators have given a signal. An uptrend has begun, which means you can make profit. In your work, I recommend that you always keep note of your work. Record the trades you open, the currency pairs you work with, as well as the strategies and trading times. All this data will help you better understand when a particular strategy works best. In addition, less effective strategies will be immediately visible and they can be excluded from your work. This way, you can analyze all your work and make the right choice. Here we go! The third profitable trade. I see that my account has already increased to $100. Let's open the last trade. I'll try to increase it even more. I have no doubt about the reliability of this situation. All three indicators give a signal. I think the price will decrease and I'll be able to make profit. I'm sure that this video will be useful to you and you will discover a new profitable strategy. I recommend you try it in your work. Let's wait for the trade to complete. In the meantime, I'll give you some very important advice. Don't try to test the new settings right away. Many novice traders open 5 to 10 signals and then start experimenting with settings to improve their strategy. I advise you to study this strategy very well and learn how to work with it. Open at least 70 trades, understand which situations are suitable for work, and make profit. And then you can experiment and create your own method for your work. Yes friends, 4 consecutive profitable trades. My capital has increased to $151. Amazing work. This is where I want to end the training session. Session is a plus, but for me it's not just about numbers. This is another confirmation that it is more profitable to work according to the system than to go at random. If you often find yourself making impulsive entries, it is time to change your approach. Review the video and mark how many times I've waited for confirmation. This is the key point. Write in the comments at which stage you are most often in a hurry.